I'm Jeanine Poggiolini. I'm the Technical Director at the Accounting Standards Board, and I'm going to talk to you about GRAP 109 on accounting by principals and agents. Just to give you an indication, the standard is effective from 1 April 2019, except for trading entities, but obviously trading entities are encouraged to start using the standard in formulating their accounting policies. What I'm going to do is run through a couple of key areas related to the standard. So firstly, just talking very broadly about what principal arrangements are. What is the accounting problem that we're trying to solve with principal-agent arrangements? What are the key principles at a very high level? What are the arrangements for the first-time adoption of the standard? And then if there are any changes to other standards, what those are and what the potential implications are for the implementation of the standard. So let's have a look very broadly at what are principal-agent arrangements. And by definition, it's a binding arrangement between one entity, an agent, that would undertake transactions with third parties on behalf of another, which is deemed to be the principal. If we have a look at the slide with the diagram, what I want to stress is that in principal-agent arrangements, the primary transaction is between the principal and the third party, and the agent is acting as an agent for the principal in transacting with the third party. So very clearly there are three people in the transactions, but I want to emphasize that the primary arrangement is between the principal and the third party, and the agent is merely a conduit and really acts on behalf of both of those parties in the particular arrangement. Principals and agents are usually reporting entities, but it could be that the principal or the agent is an individual just because of specific legislation that may require individuals to have certain responsibilities. So for example, a minister. Obviously the minister is not going to account for these arrangements, so you would need to identify to which entity the minister belongs in identifying some of the rights and obligations. And we have the same situation with bank accounts, and this would typically be sort of like a revenue fund kind of arrangement where it is a bank account that's statutorily created, but obviously it is linked to a certain level of government and a certain entity, and obviously they would need to account for these transactions. The other thing that I just want to mention is that we have this idea of transactions with third parties, which would typically include collecting money or paying money on behalf of someone else, but it's also about representing the principal in the arrangement with the third party. So it doesn't necessarily have to be a transaction, but there's a clear representation of someone's interests in a particular arrangement. So it could include those kinds of things too. So typical examples that we see in the public sector is firstly the collection of motor vehicle license fees by municipalities for the provincial or national government. SARS acting for the National Revenue Fund, and obviously this would typically be the National Treasury that takes responsibility for the Revenue Fund, obviously for the collection of income tax in terms of the Income Tax Act. There are some schemes that, in terms of the National Housing Program, that could also be principal-agent arrangements, and it sort of varies depending on the level of accreditation that a particular entity has in those. The provision of water by local municipalities for water service authorities, and the water service authorities are actually the district municipalities. So the district municipality would sort of have the infrastructure, and then the local authority would actually operate the infrastructure on behalf of the district. And then it is possible that there are some parts of service concession arrangements that could also be principal-agent arrangements. Service concession arrangements in themselves typically are not principal-agent arrangements, but there could be components of those transactions where there could be a principal-agent element. So just to give you diagrammatic representations of what we are talking about, just to give you the picture, talking about the motor vehicle licenses, obviously provincial government is responsible sort of for regulating traffic and road rules within a particular province. If you want to obviously drive your car on the road, you would need to have a motor vehicle license. So the primary transaction is between the provincial government and the motorist, who obviously wants to have his or her car licensed. The agent that gets appointed is the municipality, and obviously the municipality, just because of its location in the community and obviously the ability for motorists to access municipal facilities, it's just easier for the municipalities to collect these kinds of license fees instead of the provincial government setting up various structures across the province. So the municipality would obviously collect the fees on behalf of the provincial government and then issue the license to the motorist on the provincial government's behalf. But very clearly the primary relationship is between the provincial government and the motorist, and the municipality is just acting as the go-between those two parties. In terms of having a look at the tax collected by SARS, I think this is probably the easiest example to understand. Obviously, taxpayers are responsible to pay taxes due to the fiscus, to the revenue fund, and obviously SARS has been appointed to both administer and implement the Tax Administration Act and the Income Tax Act, and obviously SARS acts as the agent between the revenue fund and the taxpayers in understanding what tax needs to be paid, when it needs to be paid, and obviously settling the cash into the revenue fund, or obviously refunding taxpayers, whatever the case might be. The next example is the National Housing Program, and this could be either the National Department of Human Settlements or the Provincial Departments of Human Settlements that are involved, depending on the situations. But obviously they are responsible for understanding what the housing needs are. They would actually understand who the potential beneficiaries are, because the beneficiaries would apply with them. They would use their system. And obviously the provision of the housing is actually between the Department of Human Settlements and the beneficiary of the home. The municipalities are involved most often in terms of sort of collecting application forms. They would process the forms on the department system, but the municipality doesn't really have any say about who's actually going to be a beneficiary, nor do they have any say about what sort of house is going to be constructed. They are just really the go-between between the provincial department and the beneficiary of the home in terms of sort of the administration of the whole scheme. They might be involved in the construction, and obviously that could vary depending on whether or not they are actually the contractor or whether or not they are just acting as the project manager in these kinds of arrangements. But again, the primary transaction is between the department and the beneficiary, and the municipality is just assisting in various parts. Although the standard hasn't been implemented as yet, I think we have heard from some of the application issues that are coming through is potential misconceptions, and I think there's one I want to just run through, is that any arrangement that includes more than two parties is always going to be a principal agent arrangement. That's not the case. There are obviously, you can see from the examples that I've illustrated, there are three parties in these arrangements, but there's one primary relationship between a party, and then the agent is going to be representing the principal's interests in those arrangements. So just because there's more than two people in an arrangement doesn't make it a principal agent arrangement. There is a very clear sort of set of criteria in place to say that there is somebody representing my interests as a principal in relation to someone else, either in terms of specific transactions or just representing me in certain arrangements. So a typical sort of misconception that we have is, let's say it's a municipality that's providing disaster relief for an event that may have occurred. The municipality goes to a service provider to say, can you please supply X number of goods and services? I'm going to pay you, but instead of coming to deliver it to the municipality's offices, can you please go and just deliver it within the affected communities? Obviously there's no agency arrangement. The service provider is merely providing the goods and services to a beneficiary. There's no sort of representation in relation to the affected community. They are just going to be recipients of the goods and services. There's no representation of the service provider on behalf of the municipality at all. They are merely just delivering the goods and services to someone else, not acting on behalf of them. So I think that's a very clear sort of service provider kind of arrangement, and I think you need to caution about those kinds of arrangements where, as I say, there are more than two people involved, but it's really not a principal agent arrangement by design. If we have a look at what is the accounting problem that GRAP 109 is trying to solve, you would appreciate that government works together to achieve objectives both at national, provincial and local government level, and obviously within each sphere. So it can sometimes become quite difficult to understand who should be accounting for certain transactions, and obviously more importantly understanding if there is a principal agent arrangement in place. As I say, just because you sort of have more than two people involved in a transaction doesn't always make it a principal agent arrangement. I think that's why we made it sort of very clear to say there is a definition of a principal-agent arrangement. You need to demonstrate this first and then decide how the accounting should work. But it doesn't mean that everything is a principal-agent arrangement in government. So importantly, when do we have a principal arrangement? And then secondly, if you are a principal or you are an agent in an arrangement, who should be accounting for the revenues, expenses, assets and liabilities? The one thing that I also just want to note is GRAP 109 doesn't deal with whether one entity controls another entity. Those are outside the scope of GRAP 109, and you would need to have a look to other standards to deal with those issues. So in terms of the accounting problem that we wanted to solve, as I mentioned, because government works together, one of the key issues that you need to resolve first is whether or not you do actually have a principal-agent arrangement, or if it's something else like control or another kind of arrangement. So you would actually need to consider GRAP 109 before you actually start accounting for specific transactions. So just as you would, for example, consider whether or not you control another entity or you have significant influence, you would also need to consider whether or not you have a principal-agent arrangement. So you would apply GRAP 109 before you actually go and consider other standards. There was quite a bit of discussion in developing GRAP 109 about whether or not this concept of having a principal-agent arrangement should actually be in the conceptual framework, because it's really an overarching principle. But because it is quite specific, we agreed to actually have a particular standard on it. But you need to be mindful that you need to have this in the back of your mind whenever you are initiating transactions and how to account for them. So what are the key principles of GRAP 109? There are broadly three things for you to have a look at. The first one is there arrangement in place, and is it a principal-agent arrangement, so a binding arrangement between a principal agent and a third party? You need to decide whether or not you are the agent or not in the arrangement, and we've set up the criteria to say, well, you need to assess if you're the agent, and if you're not by default, then you would be the principal, and then obviously apply the accounting concepts for whether or not you are an agent or a principal. And we're going to run through these these three steps now. The first one is there a principal-agent arrangement in place? And the first requirement is there a binding arrangement in place between one entity, an agent, that undertakes transactions with third parties on behalf of and for the benefit of another entity? And there's two components there. Obviously, is there a binding arrangement? And obviously, are you the principal or the agent? So we'll unpack those. Okay. So let's unpack if there's a binding arrangement, and there's three criteria that we're going to have a look at, and it could be that there is more than one element of a binding arrangement that exists. So typically, if we have a look at the housing arrangements, you would find a legislative framework that would govern the arrangements, but you would also find specific contracts that could be in place, service level agreements. So the first criteria for a binding arrangement is that there could be a specific contract in place between the parties, and we are talking here about the principal and the agent, and obviously there would be very specific criteria in place about what the agent is going to do on behalf of the principal and behalf of whom, and who else is going to be affected. There could be a binding arrangement that arises from legislation or similar means. So there could be specific legislation that says that this entity is going to do this on my behalf, and this is what the roles and responsibilities are going to be. And when we say legislation or similar means, it could be laws, it could be regulations, it could be cabinet decisions, it could be gazette notices. There's a couple of things that would fit within or similar means. And lastly, operation of law, which is common law, which is probably going to be less frequent, but obviously also could give rise to a binding arrangement. If we are examining the terms and conditions of the binding arrangement, we would need to apply substance over form in deciding who is going to act as the agent and who is going to act as the principal. Obviously, if you have a look particularly at contractual arrangements, the lawyers would very clearly identify who they think the principal is and who they think the agent is. But obviously from an accounting perspective, we always apply substance over form, applying the principles of the standards. So it could be that one entity is identified as the agent or the principal, but actually from an accounting point of view, we're not convinced that that's the correct accounting outcome, and you would need to apply obviously the principles in the standards and substance over form. If there are any modifications to the binding arrangements that are in place, you would obviously need to assess whether or not there have been changes in the roles and responsibilities, and obviously account for those changes accordingly. And I think we heard quite a lot during the discussions on principal-agent arrangements that some of the arrangements that exist in the public sector are historic in nature, so there might not be a piece of paper indicating what everyone's roles and responsibilities are. So what you would really need to do is have a look at the past actions of either entities and how they have really interacted with one another, and what sort of rights and obligations implicitly have arisen from those transactions, and obviously how entities have been accounting for those. So that's the first criteria, is having a look at, do I have a binding arrangement and what the terms and conditions are. And then the next part is having a look at whether or not the entity is the agent or the principal. So as I mentioned, it's been set up to test firstly whether or not you are the agent, and if you are not, then obviously by default you are the principal. So the overarching principle of whether or not you are the agent is, if an entity undertakes transactions for the benefit of another entity, then it is the agent. If it is not the agent, then it's the principal, as I mentioned, by default. So when is it that the agent is going to be undertaking transactions on behalf of the principal? And the primary criteria is whether or not the agent is the entity benefiting from those transactions or not. So there's three criteria that we have really focused this on. So you need to demonstrate all three, unless there's very specific circumstances in place, and I'll discuss that with you. But the three criteria is, firstly, that the entity does not have the power to determine the significant terms and conditions of the transaction. The second one is that it does not have the ability to use all or substantially all of the resources that result from the transaction. And then lastly, that the entity is not exposed to variability in the results of the transaction, and we'll unpack all of these three criteria. As I mentioned, you need to have all three in place ordinarily, but there are some entities that act as regulators in the public sector, and where you're acting as a regulator, probably the first criterion is not as relevant as the other two, because you would have the responsibility in legislation to actually determine what the price would be, for example, or what the terms and conditions of those arrangements would be. So you just need to apply a little bit of caution, particularly if you are having a look at regulators and whether or not they have the ability to determine the significant terms and conditions of the transaction. So looking at criterion 1, what does it mean to say that you do not have power to determine the significant terms and conditions of the contract? So firstly, it means that you have no power to affect the result of the transaction, and when we're talking about the result, we're talking about either the economic benefits or the service potential. So it could be the quantitative aspects, or it could be the qualitative aspects of the transactions. So I mean, typically if we're talking about quantitative, it's sort of the economic benefits directly of what cash is going to be received or what cash is going to be paid, or sort of other economic benefits. Qualitatively, it's having a look at the service potential related to those transactions, which could obviously be fairly broad. But it could be, for example, the quality of the good or service that's received by the third party. It could be the administrative efficiency with which sort of goods and services are provided. It could also be the volume, so the quantum of the goods and services that are going to be received by the beneficiary. If the entity needs to defer significant decisions that affect the results of the transaction, this is an indication that the entity is not able to determine the significant terms and conditions of the transaction. Obviously, again, you need to apply some caution here when we're talking about regulators and the responsibilities that they would have in law as a regulator, so just be careful of that. But typically, you would not be able to determine the significant terms and conditions if, and these are just examples that are in the standard, the entity is not able to decide the following. You wouldn't be able to decide what goods or services should be provided. You wouldn't be able to decide to whom the goods and services are going to be provided. You wouldn't be able to influence the price that's going to be either paid to or by the third party. And you would also not be able to influence the quality of the goods and services that are going to be provided. And I think these are really 4 good indicators of whether or not you can influence the result of the transaction. If we have a look at the second criterion, which is the ability to use all or substantially all of the resources that result from the transaction with a third party. So I think it's quite important to understand firstly what we mean when we talk about resources. So resources could be that you are collecting cash or other economic benefits on behalf of another entity, but it could also be that you are involved in developing something for someone else that could be distributed. So it could be, if we're thinking about the housing example, it would be specific disbursements that you are making to construct homes or to buy goods and services to be distributed like water. So it could be those two ideas of actually receiving cash but also paying cash, and what the end result of that paying cash could be and whether or not you can use the end result of that. So quite importantly, an entity doesn't have the ability to use the resources of the transaction when it does not have unrestricted access to those resources, and very importantly, it can't decide how it's going to use those resources for its own benefit. So for example, if I've bought water that needs to be distributed to someone else, obviously I'm not able to use that water to distribute it to my own beneficiaries. If we take the housing example, the municipalities might have quite a lot of involvement in the actual construction of the house, either directly themselves or sort of overseeing it, but they have no control over who the house is actually going to go to. They're really just doing it on behalf of the department. So you need to examine the substance of the rights in particular transactions to understand whether or not you have unrestricted access and whether or not you can use the benefits for your own service delivery and objectives and mandate. And I think importantly to note is that your physical possession of certain resources doesn't influence whether or not you are able to use it for your own benefit. And I think this is quite important if we're talking about cash. So obviously where an entity is in the space of actually collecting cash for another organization, you would obviously have temporary control over the cash. It would be in your bank account or it would be in your physical possession, but you have an obligation to pay it over the other entity. There would probably be very clear terms and conditions about that. You can't just use the cash for your own benefit. You would have to give it over to someone else. And this could be the same if we are talking about specific inventory that would have been bought, particularly if it's sort of a very homogeneous kind of inventory like water. It could be quite hard to obviously understand who has control of that. You would also need to potentially understand what portion of the resources you would be able to retain as an agent, because typically you would receive a fee for the services that you have rendered, or a fixed margin, or whatever the case might be. So it could be that you have control of specific resources and a portion of that you are entitled to keep, but the rest you need to give over. And this could be for the example of collection of cash. If you are collecting 100% and the principal tells you you can keep 1%, obviously a portion of the cash you would be entitled to collect, and obviously that would affect your revenue recognition. So quite importantly, understanding that it might not be all of the resources that you either do not control, but you are entitled to retain some. Then the last one is exposure to variability in the results of the transaction with third parties. And variability means that the entity is exposed to both positive and negative results, and that the exposures are not limited or fixed. Because typically if you are acting as the agent, you would receive a fixed fee or a fixed margin, and you would have no exposure to the other risks associated with the transaction. So typically the exposure that an agent would have would typically be limited to another entity is really primarily responsible for the obligations in the binding arrangement, so to deliver the goods and services to the beneficiaries. So for example, we take the Water Services Authority and the housing departments. They are the ones that are responsible for providing water and houses to beneficiaries, and the municipalities are really just acting as the agent in those scenarios. It could be that the agent would have limited inventory risk. So if we take the example of the house, typically the department would be responsible for understanding what sort of the specifications of the house are going to be. They would potentially need to take care of the house while it's being constructed to ensure that it isn't damaged and all of those kinds of things. And obviously if the beneficiary isn't happy with the end product, it would be ultimately the housing department that they go to. Typically Typically, agents would receive a fixed fee or a fixed margin. So obviously this means that the economic variability that agents have is limited to the fee that they'll get. They are not taking on any additional risk. And typically agents wouldn't be exposed to credit risk, but obviously this could depend on the fees that are being charged or being received. So if the principal really wanted the agent to collect the cash on their behalf and be exposed to credit risk, probably they would get a higher fee to do that. So just something to be aware of. So those are 3 criteria that we would typically have a look at to decide whether or not an entity is an agent, and obviously if you're not an agent, you would then be the principal. So based on the criteria, if it's determined that you're an agent, what would the accounting look like? So the general principle is that an agent would only recognize the portion of revenue and expenses that it is entitled to or it incurred in providing these agency services. Assets and liabilities, you would obviously need to apply the equivalent standards to account for those as you would normally. So for revenues and expenses, typically agents would recognize the compensation they receive for the transactions that they undertake on behalf of the agent. As I said, typically a fixed fee, a fixed margin, or a proportion of whatever sort of disbursements are made. Quite importantly, and we've seen this quite a bit, is that agents would obviously, in some cases, let's say typically act as a project manager for another organization, for the principal. They would be responsible for making certain disbursements, particularly if it's in the space of construction. The funds that they receive for disbursements are to another party, are not revenue. It's obviously cash that's coming into the agent's books. They are using it to then settle transactions with third parties, but it's not its expenses and it's not its revenue that needs to be accounted for. So quite importantly, if it's disbursements for expenditure incurred, neither the revenue nor the expenses would actually be in the agent's financial statements, they would be in the principal's. If we're talking about assets and liabilities, obviously it could be that you need to recognize certain assets and liabilities for sort of cash or other resources that you have on behalf of the principals, and obviously you would need to apply the relevant standards to account for those. And typically you would recognize the asset but also have a corresponding liability for obviously the either goods, services, cash, or whatever it is that needs to be either given back to the principal or then distributed to someone else. Quite importantly, I think we have seen that there are some arrangements where you would validly as an agent need to assess whether or not you should be recognizing receivables as part of these arrangements. So it would definitely be an outlier in terms of the standard, but obviously you would need to have a look at it. And typically you would need to have some consideration of whether or not the agent should recognize a receivable if the agent is the counterparty to the transaction. So if we spoke about earlier that primary arrangement between the principal and the third party, if the receivable is between the third party and the agent in its name, you really need to think about whether or not the receivable should be recognized and whether or not the agent has the ability to do other things like enforce collection. It would really determine the amount that needs to be paid. It determines the manner and timing of settlement. It would determine whether or not certain debts can be written off, and sort of any other obligation that it might need to do in terms of the particular binding arrangement. And this could typically be the case where the agent is responsible for enforcing specific laws and regulations, particularly around the collection of and interpretation of particular laws. So again, just something that you need to be mindful of. It, as I said, probably be an outlier, but there are some arrangements where you really need to validly think whether or not the agent should be recognizing the receivable. So the principal, what sort of is the accounting from the principal's perspective? Well, obviously the principal, because it is the primary party to the arrangement, it would need to recognize all the revenues and expenses associated with the transaction. And this is really the transactions with the third parties that would obviously need to be reflected in the revenues and expenses. And the assets and liabilities you would just need to recognize and account for based on the other standards. So in terms of GRAP 109, there's disclosure that needs to be provided in the financial statements for both parties, whether or not you are the principal or the agent, and then more specific requirements for either party. So I think just generally for each arrangement you would need to describe what the arrangement is that you've entered into, including the specific transactions that you've undertaken. So for example, is it collecting motor vehicle licenses, is it constructing houses, whatever the case might be. And you would need to provide this for each material arrangement, otherwise you can sort of provide a very high level overview for the individually immaterial ones. Where you have applied significant judgment in deciding whether or not the entity is the principal or the agent, you would need to provide some information about that in your accounting policies too. Sometimes it's fairly clear cut, and other times it could be quite judgmental whether or not you believe you are the principal or the agent. You would need to disclose the significant terms and conditions of the arrangement, and if there have been any changes in the period, and then really just provide an understanding to users of why you need to have this principal agent arrangement in place and what is sort of the risks associated with it and any sort of mitigation strategies that you have. So the disclosure by the agent in particular, you would need to provide a description of the resources that are held for the principal and how those are going to be remitted back to the principal. So if it's cash, that I'm holding cash on behalf of the principal, and really how I'm going to repay this to the principal over the period of time. And then have a look at whether or not there's any risk issues that need to be disclosed in the financial statements, particularly where there could be risk that's transferred from the principal to the agent, where the agent sort of has a custodianship responsibility. So, I mean, if we're talking about cash in particular, obviously if there's any risk related to the agent holding cash on behalf of the principal, and obviously how it would mitigate that. You would need to disclose the aggregate amount of revenue that you've recognized in this particular activity acting as an agent, and if you have incurred any liabilities for the principal, you would obviously need to disclose that, plus obviously how those liabilities are going to be reimbursed by the principal. In terms of the revenues and expenses, you would in the notes indicate the category of revenue that you have received, plus the amount of revenue and any expenses that you have either accrued or revenue that you've received on behalf of or as an agent in the arrangement. In terms of receivables and payables, you would need to provide this information obviously when it's relevant to users of the financial statements to understand this, because it is a fairly detailed reconciliation and it may not be that relevant for all types of transactions. So as I mentioned, if you do have receivables, it could be sort of the outlying sort of situation, but you would need to describe a reconciliation of the receivables and payables at the beginning and end of each period. For receivables, you would really need to explain what revenue the principal is entitled to, and obviously if there's been any sort of settlements, waivers of debt, write-offs, etc., and obviously what cash has been received for the principal and how it's been paid over. And for payables, you would need to disclose the amount of expenses that have been incurred and obviously the amount of cash that's actually been paid on behalf of the principal. For the disclosure by the principal, it's a bit simpler because you're actually just going to provide all the disclosures in terms of the relevant standards of GRAP, so this is just over and above. You would need to disclose what resources are held by agents as custodians and whether or not any of those sort of resources are recognized by the agent, so if it's cash or inventory, are they reflected in their financial statements, how the resources have been remitted back to the principal by the agent, and then the timing of any expected remittance over the next sort of period. Provide an indication of the fee that's paid to the agent as compensation, and then have a discussion on the resource or cost implications if the principal agent arrangement is terminated. So these are just some specific disclosures that you need to provide over and above the other requirements in the standards of GRAP. So let's have a look at, now that we've been through the requirements, what are the arrangements for the first time adoption of the standard. So firstly, GRAP 109, you would need to apply it retrospectively, but you only need to do it for those principal agent arrangements that are completed on or before the effective date of the standard. So are there any changes to any other standards? There has been a minimal impact of GRAP 109 on other standards. The only other standards that dealt with principal agent arrangements were GRAP 9 and GRAP 23, which obviously deal with revenue specifically. And the effect has really just been that we've modified the discussion on how you would go about identifying principals and agents in those standards. And the examples have been deleted in those standards. And there is a set of extensive examples in the back of GRAP 109 for entities to have a look at. So what would the potential implications be for the implementation of GRAP 109? I think obviously it makes sense that you would need to go and assess all the arrangements that you have to understand if you do have principal-agent arrangements in place. So it's only the ones that are sort of in place at the effective date of the standard. But you would need to develop a process to obviously identify what arrangements you have. Obviously, build in your own criteria based on the standard to understand how you're going to assess whether or not entities are principals or agents. And obviously you would need to develop specific policies to account for those transactions based on the other standards of GRAP. And quite importantly, as I've mentioned, it only applies to the current principal-agent arrangements. You don't need to go back and sort of look at the ones that have already closed. But I think that assessment of your arrangements could be quite at least onerous, because you would need to have a look validly at all the contracts that you have to understand, firstly, is there a principal agent in place, and then understanding what the implications are.